Hello and welcome to the Santu Pirls Market Commentary, Market Week ending Friday, April 26th, 2013. Market breadth. With this past week's market rise, our bull-bear point and figure ratio rose from 1.09 to 1.42, regaining bullish territory. The total count of securities in bullish or bearish patterns decreased 3% to 2,162. The count of bearish stocks decreased 16%, while the count of stocks in bullish patterns increased 10%. The Santu Pirls PNF Market Breadth Summary Chart shows us a market now 21 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the image is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on the Membership tab, and clicking Sign Up. For those who wish, there is available a 2-week free trial membership. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 34 points for the 15th rise in 31 weeks. At a positive 117.12 points, it remains below the November 2011 top, the February 2013 top, the September 2012 top, the February 2012 top, the November 2010 top, and the January 2011 top, yet above the July 2012 top, the June 2010 bottom, the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the March 2012 bottom, and the November 2012 bottom. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 1 accumulation day and 4 distribution days. Of the other indexes, both the S&P 500 deposit receipts ended in accumulation mode, while the Diamonds Trust ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 also ended in neither accumulation nor distribution mode. Momentum. We had 4 days of the CCI 20 below zero, and at 80.57 are now outside the plus or minus 50 range for a valid zero-line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 11 weeks ago, while the daily CCI 20 began a Woody's uptrend 6 weeks ago. The CCI 20 weekly now has 17 weeks above zero and began a Woody's uptrend 11 weeks ago. At 96.51, it continues outside the plus or minus 50 range for a valid zero-line reject signal. Industry rotation the last 2 weeks. All of the top 5 indexes Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only one of the bottom 5 industries are negative. Bullish, disk drives has entered the top 5. Banks has entered the top 5. Bearish, computer hardware remains in the bottom 5. Networkers and computer tech have entered the bottom 5. Computer hardware and internet have entered the bottom 5. Oil has entered the top 5. REITs has left the top 5. Gold and silver has left the bottom 5. Focus this week. Our featured article is from the Rolling Stone. Everything is rigged, the biggest price-fixing scandal ever. The Illuminati were amateurs. The second huge financial scandal of the year reveals the real international conspiracy. There's no price the big banks can't fix. Hoping that you will enjoy that article and learn something from it as we did. Thank you for viewing this week's Sand to Pearls market commentary. Have a great week coming up, and happy trading!